Intro to trading journals. You thought we talked about it enough, but no, we got more. Trading journals are very important and you need to journal all your trades. So, keeping track of your trades and analyzing your performance. This is huge. This is what all successful traders do. I have not seen anybody that was successful not talk about this. So, if you're not successful and you're not doing it, do it. So, a trading journal is a valuable tool for tracking and analyzing your trading performance. Now, you can do it digitally, physically. We have these PDF files that you could print yourself if you don't want to buy the book, or you could digitally note take and do it on your iPad or whatever. Journals should include details about each trade, including entry and exit points, position size, reasons for entering the trade. Now, ours are a little bit different. So, let me tell you about what our day is. So, you're going to write down the date. What day it is a Monday, Tuesday, Wednesday. And then we have a timeline section. So, you could be whatever your local time is, or if you want to write an East Coast time. I write in my time just so it's easier to reference. 6:30 showed up to the charts. Morning price ran up. My bias was sell. Let's wait. 6:35. Setup has formed. We're taking a short, looking to go to here. And that's what the timeline section's for. So you could kind of have a play-by-play of what your trading session was. You have a news section, so you know of any big or medium news for that day. You have a number of trades, so you can put trade 1, took 3 contracts, whatever. Got 5 handles, 6 handles. Then we also have profits and commissions. So you're going to write trade 1, made $200 or whatever. Then we have, after your trading session's all done, you took screenshots of your trades. Your last part is your reflection, and you're going to write, price chopped around. I was getting emotional, but I stuck to my rules, and we ended up taking partials and getting stopped out. Or I didn't listen to my rules. We ended up having a big loss. I went in with the revenge trade and failed. So that's what the reflection is, and you want to do that every single day. And then we have a weekly and monthly chart, so you could keep track of all that data and build it up for the week and the month. And then you'll know, okay, I'm on track. Look at the week, look at the month, step back from your day-to-day trading, be like, yeah, I lost today, but overall for the week, for the month, we're trending up. Let's celebrate that. Let's not get emotional. We'll come back. This is also going to help you identify what's working and what's not working if you need to adjust your strategy, but I don't recommend just because you lost once, you adjust your strategy. You'll adjust it because you've been back testing and forward testing, and together all that data is, you find a common thing that if you just tweak that one thing, it'll work a little bit better. That is how you adjust your trading strategy. You don't one loss, abandon it, go find something else. Loss, abandon it, go find something else. Most of the time that strategy is losing because you're emotional and you're not listening to those rules. By regularly reviewing your journal, you can develop better trading habits and make adjustments to your trading plan to achieve better results. So, like I just said, overall, with all that data, if you could find a common tweak that will help, that is what you do to make adjustments. But if you're like, I lost twice, I lost 3 times, I hate this trading strategy, I need to find something else. There's something else that's way better. That's not the way to go about this. Like I said, you could make money from anything. We could go in the charts, get any 3 indicators, and make money. And I'm thinking about making a YouTube series on that, of just random strategies, dumping them out. You could be profitable as long as you have your rules in place.